Do you find it difficult to set proper stop loss? Does price always hunt your stop loss and cut you out? Well, in this video, I'm going to be teaching you how to set proper stop loss, how to trade properly, and prevent the market from hunting your stop loss. So, if you're not yet subscribed to this channel, subscribe because we are getting important updates, forex strategies that will better your trading. So, what are you waiting for? Subscribe now and become part of this family.
Let's begin.
Stop loss is a very important tool in trading, and you cannot succeed in forex trading if you don't know how to properly use your stop loss. Okay, it's not enough to have a capital, it's not enough to aim at a profit, or if you don't know how to set your stop loss, you can never have an edge over the market. So stop loss are important tools. Forget teachers or mentors that tell you that you should trade without stop loss. You must trade with your stop losses because it helps you manage your risks. Because sometimes you cannot manage the risks because emotionally you are attached to that trade. It is your stop loss that will protect you from losing lots and lots of your money.
Rule number 1.
Never trade without your stop loss. Now, how do we properly use our stop loss? First thing you need to understand is that stop loss is more psychological than physical. It's a tool, and if you as a person does not have proper control, you will also not be able to use stop loss properly. Because one of the issues people have in forex trading is that even when they put stop loss, they shift and move their stop loss if the trade is coming against them. If you're doing that, that is wrong.
You're so wrong, bro! So wrong!
You're only going to be destroying your account and risking lots more by doing that. Okay? Stop loss is a tool, and it's also psychological because you have to be disciplined as a trader.
Discipline your mind.
You have to be disciplined. And that's how to properly use it. So the first way to use it is to properly discipline yourself. That whatever you have agreed to risk, you stay with that risk. So that whatever outcome the market gives you, you accept it and you move on. Because the truth is, no trader is 100% perfect at analysis. We can be wrong because we don't own the market. So why would you then move your stop loss if you know you can be wrong? A trade is wrong, a trade is wrong. Okay? Don't shift stop loss because you feel like it will reverse. You need to learn how to trade what you see, not what you think. Trade what you see, not what you think. So the first thing to know is that you have to be disciplined. If you're risking 1% or 0.5%, that should be it. You should always calculate your positions based on the agreed amount of risks. No matter your position of the stop loss, you should always ensure that your stop loss falls within that amount you're risking. If you're risking 0.5%, let it be 0.5%. Don't risk more than that. So, before you put your stop loss, you should have first put your stop loss in your mind. Okay? You should know where you're going. Once this trade goes beyond this point, it has fallen short of my expectation. Once a trade falls short of your expectation by certain percentage, let's say you are expecting a reversal and then you entered, and all of a sudden, instead of getting a reversal, you're getting a pushback, a strong momentous pushback. You should know that that trade has fallen off your radar, it has fallen off your control, and you should be able to tell yourself that, okay, this trade, I'm stopping it. So before you put your stop loss physically, you should be able to put your stop loss mentally. Tell yourself where should this trade get to for me to know this trade has gone beyond my setup. Understand? A good trade will not stress you. Remember this. A good trade will not stress you. A good trade will not stress you to be on profit. It's only a bad trade that will linger for hours in losses. I'm telling you the truth. A good trade, mostly if you're a day trader or a scalper, a good trade should not linger in losses more than 1 hour. If a good trade lingers in losses for 2-3 hours, that trade is obviously not going to go your way. Mostly if you have a very tight or short stop loss. Okay, so you should be able to get trades that in 30 minutes you're already on blue, you're already on green. Not when you're waiting 1 hour, 2 hours, you're on loss. That trade is going to hit your stop loss. So I want you to know this. Just take a note on it. And then a lot of people think that support and resistance are good zones of putting your stop loss. Yes, this is true, and this is also not true. Yes and no. Yes, support and resistance are good zones because they serve as areas where price will tend to have issues with passing or exceeding. Those are areas where you know that okay, if price get to that zone, before price will break through, it will be very difficult. Those are good areas for support. Those are good areas for support. But it can also be a problem in terms of the market makers can also use that areas to track our entries, to track our stops. Those areas can also be tracked by the market makers, and they can always move price against us to hit our stop loss, most especially if our stop losses are very tight. So in this video, I'm going to be teaching you how to properly set your stop loss at safe zone, and then how to tell yourself when to exceed a trade when a trade is no longer going your way. Remember, stop loss is more psychological. It means it is more you than what you say physically. So before you enter a trade, you must have first of all set your stop loss in your mind and be able to close the trade before it hits your stop loss. Because a good trader knows how to close bad trades early and know how to accumulate profit. That's the definition of a good trader. You know how to quit bad trades early and know how to accumulate your profits. That's how to succeed in this first market. So let me show you on the chart where and where I would have set my stop loss and what will be the likely response of price to those stop losses. And let's see and discover what are the better ways to set our stop loss. So come with me. When trading stop losses, one of the best areas to put your stop loss is to put your stop loss around certain key zones. Certain key zones that you know over time that stop loss would be safe. There are certain structural patterns that happens in the forex market that when they happen, when you put your stop loss around certain key zones based on that structure, your stop loss will be safe 80% of the time. Okay? For instance, the double top and the double bottom are one key formation that when they happen structurally, putting your stop loss above the second peak is a guarantee protection to your stop loss, because structurally that second peak does not swing too high above the first peak. It's either it swing a little down below it or a little above it. So it is structurally proven that putting your stop loss in a good position around that structure, your stop loss would be safe. Forex is all about probability. We work with probability. So when we see a certain pattern happen, we know that that probability is on our side, and we know that based on that structural pattern, our stop loss is safe around certain zones. So because you don't just put your stop loss anywhere. Okay, so you find key structural pattern, you find key structures, and when those structures happen, your stop loss will be safe at those zones based on the structure of the market at that time. You understand? Because price will always do what it does best, and it's your job to know the safe areas that price will be safe based on structure. Now look at this M pattern about to happen. This is a double top about to happen. We already having the first leg, the second, and then the third will likely go here, and then it will now form an M shape, a double top. So this I can already see it happening. So what we do now is that we will now put our stop loss to see if price really did hit our stop loss, or did it went our way. For this in the first rejection, this is the first candle that is forming as red. We already know that this zone here, price reacted by changing direction. You understand? So we are expecting that when price gets to this same zone, and we expect that when price gets to this zone, when price gets to this zone, price will repeat the same thing by creating the M-shaped pattern. So let's arrange our stop loss very well. And okay, so we put it above the zone. So we put our buy limit order, and then we switch our profit downwards. I'll take profit downwards. So I hope you're curious to know what happens next. when price hits this zone. Are you curious to find out what happened next? Okay, I'm curious to find out what happened next. So let's see. The price hits our stop loss. Will price hit our stop loss, or will it come down and give us hit our TP? So let's see. So price rejected that zone, and that's picked our entry and not coming down, and boom, we hit our profits. So you see, our stop loss is safe. 9 out of 10. Each time you do this, you always see good results. The next method is past price reaction around key areas. How did price react around certain key areas when they approached? Let's say price was on a strong bullish trend, and then price suddenly reacted with great reversal momentum. That should tell you that that area is a very strong zone. Look at how price moved in this direction. So price moved upwards. Price moved from here and to here. So price moved away from this position here. Price moved up here, and then watch what happened around when price got here. Instead of price to continue that upward motion, price made a sharp drop. You can see the drop here. A very sharp drop. Price drops here. That should tell you that this zone is a very strong zone. So how do you then trade this? You wait for price to come back to this zone. So first of all, you mark the zone. And then wait for price to come back to that zone. So let us wait for price to come back to this zone. Let's see what happens. Okay, we'll wait for price to come back to that. Now price is back to this zone. Now you don't just enter because price is back to that zone. You wait for a confirmation candle by red confirmation reversal candle, and we're having it right now. You can look at the red confirmation reversal candle, telling you that price is ready to reverse. It has rejected going up based on that zone, and now price ready to going to come down. Now let's see if we put our stop loss, if price would hit our stop loss or keep going down. So we will put our entry. So let's see if price really did hit. So let's see if price hit our stop loss or really went and hit our TP. So bam, price hits our TP. Price has hit our TP. So you see, so if your stop loss is hit, it's because you do not observe the past candle and the reaction that surrounds the past support and resistance. Support and resistance always tell you a story. Because if a support and resistance is weak, right, it will not reject price, it will not reverse price. If it is strong, it will reverse price. And because what I want you to remember is that the more times a zone is tested, the weaker it becomes. So if a zone has been tested up to 3 to 4 times, that zone will definitely get weak and weaker. So the more times a zone is being tested, the weaker it gets. So this zone has been tested only once, and you can see how when price get to that zone, price reacted. Another thing is that the momentum, the previous candle was strong. The momentum of rejection around this candle, momentum of rejection from this zone by this candle was a very strong rejection. So seeing this alone tells me that the rejection of the zone is a very strong zone. This zone is a very strong zone because of the way the zone rejected price from going up. So that should be another way to put your stop loss. If your stop loss is hit, it's because that zone is not a strong zone. So always look for strong zone when you are trading support and resistance. So I'll be sharing more videos, sharing more examples on our next video. But for now, stay safe. Subscribe to this channel because we share information that will better your trading. So subscribe, become part of this family, and you see your trading will never remain the same again. This is Victor Angel. I'll be seeing you next time in our next video.